Let's just move over to my first guest, Steve Nwachukwu, who is the MD at Steward Asset Management. Hello, Steve, and welcome to the program.
Thank you. Beautiful morning, Nancy.
Beautiful morning to you too. Let's get started. I've just given our viewers a rundown of what happened last week. Just speak to me. Do you think that the feel-good sensation in the equities market space is over? You know, there was a time we had the feel-good sensation coming in from 2020. Of course, the Nigerian market came into 2021 with a 50% rise. Do you think that that feel-good sensation is over?
Well, Nancy, let me start from this point that market still remain Nigerian. If there is such possibility in any exchange in the world, Nigerian stock exchange or Nigerian market possesses such kind of qualities that the market can still rebound and still give you close to the same fee what it did last year. So it still remains a virgin market.
You did not answer my question. Is the feel-good sensation over?
That's the point I'm saying. When I said that the market can still give you 50%, the sensation is still there. The potentiality of the stock, the ability of the stock doubling their prices or having a good percentage is still there. So the sensation is still there. What can drive these equities? Because our stock market or overview of our capital market, most equities quoted are not selling above their intrinsic values. They still have potentials that will attract investors, that will make the prices surge. So the potential is still there, and the possibility of prices rallying is still there. So the likes in the banking, in the insurance, in the industrial sector, consumer sectors, their prices are relatively cheaper or lower or compared to their earnings. When you do comparison of the prices of this stock vis-a-vis their earnings, the percentage in returns for their earning, you cannot get such in the world. You cannot get such in any stock exchange or in any quoted company across the world where you get a flat of 8 to 10% returns on your investment based on dividend declarations that most of these companies give. So this is what investors look at, and they will harvest such opportunities each time they take their decisions.
Since you're optimistic that there's still a feel-good sensation in the Nigerian market, especially the equities market, that we can still do a 50% rise this year, let's analyze the first quarter that's was just over, January to March. How much did the market do? And where do you see this 50% coming in from? Because full year earnings season is over. The first year banks or even the companies have started releasing. You are smiling because you know where I'm going. And
yes, I do.
Yes.
I do.
Okay,
if I may respond quickly, I think what you are just looking at is the moment. At every given time, there is a moment for correctional momentum where stocks will retrace. Investor will think, I've made like 50%, I made like 30%, I made 10%. Can I take my profit? So this is what is actually happening, because most of the companies have declared their dividends and they've weighed in their dividend and they have taken profits. There will still be a time you start seeing second quarter, first quarter reports coming in, and you start seeing new beginnings, you start seeing new openings, you start seeing potentials in stocks and most stocks, and you start taking decisions. So definitely this is a time where having come out from 2020 and having 50%, and first quarter we don't have I think first quarter less than 1 or 2 or 5% in negative and thereabout. So we still see
okay. Okay, Steve, we lost you there just for some seconds. If you can hear me, how do you think that the debt market is impacting the sentiment in the equities market? Still based on this your assumption that the Nigerian market, equities market, can still give a 50% this year? Because we've seen what's happening right now in the debt space. We've also seen yields rise across board. So how do you think that's impacting the equities market?
Oh, yes, definitely the capital market and the money market work pari passu. Two of them weigh each other at every given time because 80 to 90% of the players in the capital market
Okay, the network seems not to be
is
very friendly.
often
Okay.
is in the.
Okay, Steve, are you there?
Can you hear me now?
Yes, I can hear you now.
I'm with you.
So go ahead, please.
Okay, I was saying that the nation's capital market, the players in the money market and capital market, that is the equity section, also work together. So 80 to 90% of those who play in the money market also play in the capital market. So each time you have a rise, a yield rise in the money market, you see some funds leaving the market to chase after most of the coupons or most of the treasure bills or commercial paper or bonds issued by federal government or other government agencies. So each time there is a yield rise in the money market, actually takes some liquidity or takes some funds away from the capital market. It's normal. The same way when there is a potential or dividend declarations or good or whatever or drop in the yield in the money market, you see start seeing funds moving into the capital market. So these two markets actually work together. At present, we are still start seeing the little rise surge in the yield in the money market from as low as 3% we had last year to up to like 6, 7, 8%. We are seeing some institutions or some company floating commercial paper or bonds giving up to 7%. In fact, the last the CBN, the federal government through the debt management office issued, the yield is above 6.5% or above 6 to 6.5% yield increase compared to what they had last time of 3.5 to 4%. So when there is a yield rise in the money market, we start seeing some little funds flowing into the money market. So it's a normal.
If we take a look at the full year 2020 earnings that have been released, I think the full year earnings 2020 is over, if I'm not mistaken, since the end of the first quarter.
I think potentially it's over, but we still have few and couple of other stocks that are yet to make available their full year.
Statement.
Mostly in the insurance, I think about 70 to 80% of the insurance company have not been able to declare what they will be paying to investors or what the full book actually look, because owing to the fact that they also have a primary regulatory bottle, just like the CBN, we have to vet the banks audited account before they make it open. So the same way the NEPCON will also have to vet insurance companies account or full year financial statement before the sector have not been able to do that. So in coming days or in coming weeks to come, we expect them to release it at the floor of Nigerian Stock Exchange and other few institutions.
We must also say at this time that for companies that do not also release their earnings, the exchange is bound to give them a penalty.
Sanction.
Yes, to sanction them, isn't it? And I think the exchange even sanctioned some companies last week, if I'm not mistaken, or so. Go ahead, Steve.
Well, they are not yet. I think the warning signals will start going to them. First, they will place them on technical suspension before they can even place them on full suspension, meaning that nobody can trade on those stocks until they make available the prerequisite informations or details that require them to be made available to invest in public. So I think time will come when they will do that. But for now, it's still, maybe some of them will also have also, just like some fuel insurance companies have also gone ahead to give an advance notice requesting for extension of time so that they'll be able to file their full financial year report. So that is allowing the market. There cannot be exemptions for a couple of 1 month or 2 months before such information. But they all have a deadline. I'm very sure deadline of this very month of April to make available all full financial statements once you are quoted at the floor of Nigerian Stock Exchange. Except the likes of Orlando, who has a court issue rising from the management puzzle with the Securities and Exchange Commission. So it's a court decision. So Nigerian Stock Exchange cannot place such stock on full suspension, notwithstanding this institution, the Orlando, have not made available its full financial or quarterly statement for the past 18 months or thereabout, or 24 months. They've not been able to make, given to the rise of the legal issue between Orlando management and the Securities and Exchange Commission.
Okay, since we're talking the companies now, you've brought me to that. I'll come back to the earnings later, just shortly. I don't know how the market is taking the news around Dangote and BOA. The news, I don't know if you saw that news circulating in the past few days over sugar and all of that. You see these two companies, these two business titans, yeah. And their founders were just on the Forbes list released last week, just a few days ago. The owners of these companies, or their founders rather, the billionaires, so to say, or so to speak, rather, Dangote, Abdul Samad, Rabiu, their wealth increased. And you see these two titans are fighting. How did the market, or how is the market taking all of this? Because those companies are listed.
Oh, honestly, it's healthy. Let me come from the positive part of it. It's healthy.
Hello, Steve. Oh, okay. I don't know.
Vary in the
okay. Steve, if you can hear me, I think let's... Okay, can you hear me now? Because the network is really...
better.
Okay, it's better. Okay,
go
ahead.
Let me progress in the thought. Like you asked the question, I said the rivalry is healthy from the positive point of view. It's positive in the sense that these are two heavyweights. In the cement industry, two of them are competing. In the sugar industry, two of them are competing. Even in the oil sector, two of them are competing, because I'm very sure by 2023 or 2024, the BOA company will also float their refineries, which has up to 300 to 400 products. Them in all sectors of the economy. Both of these individuals are all doing well. So the news is good for us. If they're healthy, they cost more price in the market. If Dangote decides to shoot up his price in cement, and BOA is selling cheaper, Nigeria.
Steve, I don't know if we can continue this conversation.
For BOA cement.
Okay. Steve, I don't know if we can continue this conversation because the network is really poor at this time, but I think I should just ask you the last question before we go, if the network will permit. Are these earnings that we've seen so far released, are they earnings that were expected by the market in a pandemic year?
Yes, before I give you the last answer to that, let me just quickly tell you what has happened in the market in the issue of the demutualization, where you have the Nigerian Stock Exchange now fully demutualized. What simply means is that from a mutual-owned organization, it has transformed to a shareholding-owned.
Hello, Steve.
Status.
Steve, the network is breaking, and I don't know if we can continue. I know the question, I know what you want to say about the transition of Oscar Onyema to being the CEO of the NGX. That's the Nigerian Exchange Group PLC. Now, the demutualization you're talking about, that the Nigerian Stock Exchange has been demutualized, I think, into 3 companies. That's what you are speaking about, isn't it? Can you hear me? Hello, Steve. Oh, okay. The network is not allowing us progress with this. Thank you, Steve, if you can hear me. The network has been poor.
Exactly. I can hear you clear.
Okay, but we can't hear you, and we can hear you, but it's breaking, and I can hear you in my ears. But I think we'll leave it at that, Steve. We'll continue this conversation again. Thank you for joining us.